Our focus is exclusively on technologically enabled innovation, robotics, energy storage, artificial intelligence, especially blockchain technology, and multi-omic sequencing, healthcare. I saw the CEO of Bio, very good. Those are all very deflationary in their impact. So pretty excited. We think the surprises are going to be on the low side of inflation expectations.
Few investors generate as much debate, conviction, and long-term thinking as Cathie Wood, CEO and CIO of ARK Invest. Whether you agree with her views or not, her framework forces investors to think beyond short-term price action and focus on structural change, technological deflation, and long-duration innovation cycles. Cathie Wood begins by addressing ARK Invest's performance and positioning over the past year. According to Morningstar rankings, ARK had 3 or 4 of the top 5 performing funds, a notable achievement given the volatility investors have endured. Before we go on, just a quick reminder, liking the video, subscribing to the channel, and commenting helps this reach more people who care about Bitcoin and macro trends. Appreciate the support.
Last year, Morningstar, in the Morningstar rankings, I think we had 3 of the top 5, or 4 of the top 5 were ARK funds, top performing. Of course, we had 2 big corrections. We had the trade turmoil in April. That was an amazing buying opportunity. And what we do typically is concentrate towards our highest conviction names when we have an opportunity like that. We did that. Same with the government shutdown. That was a little less severe. What did we learn? Well, one of the things that we've learned over the last few years is we can see inflation coming down clearly, but in the reported numbers, it is stuck. And I think a lot of people are wondering, wait a minute, this market is near record high valuations. How can this be? This is a setup for a correction. And we're looking at other periods in history. If you look into the 90s up to 97, I think it was, and in the 2000s, the early 2000s, we had very strong markets as the multiple moved down. So what does last year teach us? We must assume that valuations are going to compress, and we do. We do that in our bottom-up analysis for every company. But we're pretty excited about the inflation outlook thanks to oil prices, housing prices big time. You see the home builders, KB Home, cutting its prices by 7%, and others following, and productivity gains, unit labor costs coming down dramatically. I think on a year-over-year basis, they're up 1.2%, but the last quarter reported they were actually negative. So there are a lot of deflationary pressures, and the last one I'll cite is technology. Our focus is exclusively on technologically enabled innovation. And in each of the 5 major platforms, robotics, energy storage, artificial intelligence, especially blockchain technology, and multi-omic sequencing, healthcare. I saw the CEO of Bio, very good. Those are all very deflationary in their impact. So pretty excited. We think the surprises are going to be on the low side of inflation expectations.
Tesla has always been one of your big holdings. In terms of just sales, obviously things have been challenged, but there's a lot of excitement about autonomy. There's a lot of excitement about the Optimus robot. What is your sense of where things stand at Tesla right now?
Yes, the EV sales environment has been challenged, but the market is shifting its focus to the RoboTaxi opportunity. So we're moving from 15% gross margins in autos, the hardware, to more of a SaaS model where RoboTaxis' recurring revenue model is those margins are more in the 70s and 80s. And I think as analysts understand that that's where Tesla's going, and they start building in the model for robotaxis, they see a tremendous opportunity. So it's been interesting to me to see upgrades, even by some auto analysts, now that they're beginning to understand that this is not an auto company. Maybe they're working with their tech analysts and understanding the stock a bit better.
So when you think, though, about autonomous robotaxis and you think about robots, what does that look like? And is there an argument? Look, some of the critics would say, cars aren't working the way they're supposed to be working right now in terms of what's happening with the EV market. And some of these other ambitious efforts are going to take a long time to get to a meaningful escape velocity.
Well, we're keeping an eye on how quickly Tesla's footprint is expanding here. And it's expanding a lot faster, I think, than many people expected. And it's interesting to watch Waymo as well. We draw in Texas. We draw the footprint, and they're competing with each other. Competition is a good thing. So I think this is actually going to happen faster than most analysts think. In terms of the proliferation of robotaxis, especially if we get more federal legislation instead of just state by state. On the Optimus robot side, there's a lot of excitement in robotics. That in the private markets has been a huge space this past year. We look at an Optimus robot. Our chief futurist, Brett Winton, working with Sam and Daniel, have concluded that an Optimus robot is going to be 200,000 times more difficult to get working correctly relative to a robotaxi. So you'll have waves of Optimus improving with time, but full human is going to be quite difficult. Nonetheless, the robots that we're seeing, pick and pack and right. Lifting things, they're starting to make waves. This next round is about $800 billion, so a near doubling. And we wouldn't be surprised to see it become the first $1 trillion company. And especially now that there's a new opportunity, data centers in space, to avoid all of the not in my backyard obstacles that Tesla and others are facing. So we're starting to do the modeling work on that.
Skeptics argue that autonomous vehicles are still years away, pointing to regulatory hurdles and uneven EV demand. Cathie Wood disagrees. She highlights how rapidly Tesla's autonomous footprint is expanding, especially when compared to competitors like Waymo. In places like Texas, their operational footprints increasingly overlap, and Wood sees this competition as a positive signal.
They have to cut rates because inflation keeps going down. So if you look at CPI numbers came in 2.7%, right at estimates. Core inflation, so removing food and energy, that came in at 2.6. Estimate was 2.7. So call this kind of like a flat to slightly down report compared to the estimate. In a world where we were promised high inflation, empty shelves, and the next Great Depression because of tariffs, having inflation come in at 2.7% 2 months in a row, and last in November numbers, everyone was like, whoo, it's chilly, it's cold out here, right? Mm-hmm. Well, that's not what we were told. And so then you calculate for, the Fed has no clue what inflation is. That's what people don't want to admit. The Federal Reserve has no clue what inflation is. Why? I'll give you 3 reasons. The collection of data is highly, highly, highly flawed. We are still in 2026. We are calling people on the phone who own a home, and we are saying, yo, George, how much you think you could rent your house for? George doesn't know shit about renting his house. And he throws out a number. And we do that for a couple thousand people. Bam, that's our owner's equivalent rent. That's crazy. We are sending people into a grocery store with a physical tablet to punch in the numbers. I don't know about you, but if I go and I send you, who's a very smart, good-looking, strong, amazing person, into the grocery store with a tablet, and I say, you got 30 items. Make sure you find the right item. So it's not Campbell's chicken noodle soup. It's Campbell's chicken noodle soup, low sodium, no beans. And then you got to input the correct price, and you get it 30, 40, 50 times. You think you might make an error?
You would think there's guardrails, though, for that, right?
They're sending people in with physical tablets. These people don't know how to spell guardrails.
Maybe they could just contact the grocery store.
So, welcome to Trueflation. So that's data collection. Methodology-wise, people don't know this fact. 40% of the inputs to the CPI calculation right now, the Federal Reserve is openly saying, we're guessing. They are saying we don't have hard data, we are guessing, estimating, they call it. So 4 out of every 10 inputs into the calculation, they're making it up. Now, again, they'll say, oh, we're guessing because we're educated. Maybe. You guys were pretty bad at guessing inflation and guessing money printing and guessing everything else. But that's a problem. So you have data collection's wrong, methodology is wrong, and then my favorite thing. You're looking backwards. You ain't looking forwards. So you're trying to report what is December's numbers. Well, don't you think by January things have changed? Yeah, duh. We're having more and more deflation.
How important is that price action versus, call it, the technology and like the payment rails that Bitcoin lets people access?
Well, there's two different worlds. In the investment world, 85 to 95K don't matter for Bitcoin. It's all the same. It's a range. Over 100, media can come flying back. Wow, Bitcoin, woo, it's going back up. It's over 100K. It's 6 figures, but whatever. There's a psychological milestone at 100K. In terms of usage, people always be like, oh, nobody uses it to buy coffee, whatever.
Jack Dorsey does.
My general thought process is Bitcoin does the one thing that it's supposed to do, which is over long periods of time, it protects your purchasing power. Personal economic gain has nothing to do with their interest in Bitcoin. Like people are like, oh, I'm here for the, all this stuff. I say, by the way,
sovereign freedom.
Most of the people I know in Bitcoin actually really believe the potential positive impacts of Bitcoin on the world. They believe, just like I do, that it really can protect purchasing power. And if people save in Bitcoin, it's much better than dollar. Like they believe all that stuff. Maybe the sides that come with the main course is like they're going to make money as well economically. I don't think that people should hide that. Like it's part of the story, right? It's actually one of the main marketing messages that have gotten people into Bitcoin over the years. But when people tell me, no, it has no impact whatsoever, I say, well, why are you hoarding all that Bitcoin? Why don't you use it to further Bitcoin? Why don't you spend it? Go and you just give all your Bitcoin to the developers then. That would have a bigger impact than you holding it, right? I have yet to have a taker on that one. Everyone's like, right? So again, it goes back to like, it's just extremism is usually not where the truth is found, right? And so I think that I own more Bitcoin today than I did at the start of 2025.
Cathie Wood's message is not about short-term predictions or chasing the next headline. It's about understanding where deflation is coming from, how innovation reshapes markets, and why volatility creates opportunity for patient investors. While many fear valuation compression, she reminds us that history shows markets can thrive when productivity accelerates. While inflation data looks stubborn, structural forces tell a different story. And while Tesla's present looks messy, its future could redefine entire industries.